For more on the state of the U.S. economy and to break down this analysis on what the Fed said, we're joined by Nicholas Economides. He's an economics professor at the New York University's School of Business. Good to see you again, sir.
Good to see you, Phil.
Let's start here. Let's start with the Fed. Reaction to what the Fed said, were there any surprises in your opinion?
I don't think it's a surprise, but it seems like the Fed is trying to reassure the market that nothing radical is going to happen quickly, but at the same time be firm that there is going to be a change. My feeling about this is that this change, this increase in interest rates is going to happen faster rather than later. It will happen earlier rather than later. I would expect it to happen in the first few months of 2015. But of course, people can disagree on that, and it remains to be seen.
But, all right, well, here's kind of a silly question. What if I disagreed? I mean, what difference does it make whether they raise rates in May or February or March of next year, whenever that is? And I guess my question is, why are we so obsessed with what the Fed or when the Fed's going to raise rates?
Well, that's a good question, but the cheap money has driven to tremendous heights the stock market and various commodity markets. So when the interest rates go up, you will see adjustments of these numbers. You will see the stock market fall, you'll see the commodities fall. And I think that the impact is going to be much larger in the more risky markets and in the more risky commodities. And therefore, we won't see a huge adjustment in the exchange in New York, but we may see very significant adjustments in developing countries, and we definitely will see a drop in the prices of commodities where there is extensive speculation because the money is cheap right now. When the money becomes expensive, it becomes expensive to speculate, and you will see drops in the indices of those commodities.
Okay, fair enough. When Bernanke was leading the ship, remember, he told us that he'd be watching the job market very closely and also the inflation issue very closely as well. I think we can agree there's no inflation, but the job market issue, it's gotten significantly better, but then you hear skeptics out there who say, well, it hasn't gotten good enough to where the Fed feels comfortable raising rates. Both parties can't be right. Who's right?
Well, what I was going to tell you, Phil, is that, look, I mean, things are not perfect in the job market, but one has to assess whether this policy is in fact going to make a big difference or not. If we got to the point where the policy doesn't have any more a substantial impact, there is no point to keep this policy because, as we were saying a minute ago, it has some bad effects. It can create bubbles in commodities, for example, which is unintended, but it does have these effects. So I think that the Fed has reached the point in which where they say, look, I mean, we have done more or less everything we could. We are successful at the 80 or 85% level. Maybe it's enough. Maybe we should just let it go and go to some normal functioning of the economy.
You know what I'm surprised about? Here's what I'm surprised about. You look at what's happening with Ebola. There's a real concern there. Look at what's happening with Russia and Ukraine. Look at Scotland. They want independence, or at least some of them do. Then we have all the economic issues in the U.S. But the stock market is at all-time highs. Despite all these things are happening in the world, what are you worried about?
Well, I mean, that's an excellent observation. It seems like all these geopolitical problems should have had an impact on the American market, and they don't. In my opinion, that means that somehow the American market and the world markets are on steroids. And the steroids is really the very low interest rate that artificially has been set up by the Fed and to some extent by the European Central Bank. So that's where we are. If we want to see a more real picture of the world economy, we should go back to normal interest rates. And I think that this is going to happen, in my opinion, in the first part of 2015. If I'm wrong, in the second part of 2015, but it will happen in 2015.
We're going to end it with that. Nicholas Economides telling us that steroids, well, are in the marketplace. By the way, they're actually banned in sports, so I guess that answers the questions in case anyone's curious how long this should continue. Thank you very much.